Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's nothing in comparison to the membership you get once you sign up and join the premium membership. As soon as you sign up and join, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market. All right, so let's take a look at some charts here. We're going to start off with Alibaba, and I'm going to point out a couple of things on this chart that I'm seeing for right now, and I'm also going to show you in the recent past for Alibaba where it looks very similar to that pattern. So what we have here on Alibaba, we have a rising wedge, triangle, whatever you want to call it. Again, if you watch these videos, you know that I'm not super technical on these patterns and the textbook definitions of them. But you have this pattern, you have this trend line here, and it clearly broke that trend line. And anyone can draw a line on the chart and make it seem like it's valid. But what you want to have is the trend line and the price reacting to each other. So clearly you can see we got to bounce right off the trend line there, right off of it here, direct touch and bounce off of it here. And then as you can see the last few days, look at that angle, bouncing off of that trend line right here, day after day, and then finally we broke it today. So I'm pointing that out because you can see that this is definitely an important level here for Alibaba. The next thing I want to point out, so we've got that trend line break. The next thing I want to point out here is we have this false breakout, okay? We have this key resistance right there. Here's that resistance again, and then we broke over it right here, and then we broke back under it right here. So that made it a false breakout, all right? Now we have the false breakout plus the break of the trend line. Next thing, we've got a negative divergence. So as Alibaba is heading higher, we've got MACD heading lower. That's what's called a negative divergence. Next, as we broke the trend line today, we broke back under the 50 level on the RSI. All right? We've got a lot of reasons here. That's 4 reasons. We've got a false breakout. We've got a trend line break. We've got a negative divergence. And then finally we've got this RSI below the 50 line. Next, I want to show you when it looked exactly like this previously, and this is back in last October. I'm just kind of zooming in here so you can see right there. Okay, so here it is. Last October, look at this. Last October, we did the same exact thing. So we had this really nice uptrend, okay? We've got Alibaba trending up, and then as you can see, it broke out of this rising wedge, out of this triangle, out of the trend line. So here's that trend line. You can see it getting bounces several times there, and then as you can see, it broke it right here, all right? As you can see, look at what happened. It went from about 105 down to about 87, so pretty big drop. Obviously, it bounced big time after that, but I'm talking about just the short term and what it's going to do right now. So we've got that false breakout here as well. So here's that resistance, broke over it here, and then we broke back under it at the same time we broke that trend line. You can see we've got MACD that was heading down. You can see RSI headed below the 50 line right there. So a lot of things lining up. The pattern looks the same. The trend line looks the same. MACD looks very similar. And another thing too is it happened almost at the exact same time just a year ago. So we broke the trend line right here on the 12th of October last year. It's the 23rd of October. We're just about 11 days off, all right? So seasonality, you know, is a big thing here. So we've got seasonality, we've got pattern, we've got a lot of things that are looking very, very similar to the previous time it dipped. So I am looking for some downside on Alibaba. No crash or anything like that, just looking for some downside. Target would be about 160, and that's based off of this previous support. You can see that right there before we eventually broke over that. So that'd be that support level that could definitely bounce from right around 160. All right, the next one we're going to take a look at is Amazon. Amazon, this is one we've been calling for some downside on. You know, if you watch these videos, you would have done quite well on this Amazon trade. We called for some downside. You can see we've been mentioning for a long time on pretty much ever since it happened back here in the beginning of August, this big huge gap down with heavy volume 3 days in a row. Look at all that selling right there. All right, look at all that selling. This is a reaction to earnings right there. And we came into that level, got rejected big time. We called for downside. Now we're getting it. So likely going to head even lower, down to about 950 or so. Down at 950 is going to be a pretty big support. 950 to 940, depending on, you know, the level that it bounces at. But that's a big level down here for Amazon. Earnings is coming up for Amazon, and to me, it's not looking great for Amazon before earnings because we weren't able to break over this gap down. So normally what happens is when you get a big gap down on earnings, and a perfect example, I'm going to show you AAOI. Okay, this is a perfect example. So here we have a big gap down on earnings, heavy volume right there. Okay, and this is a very bullish stock. If you look at it, went straight up for about a year and a half. All right, so here we have this big gap down on earnings on big volume, and then look at how it was never able to break over that gap down right here. And what do you know? What happened on the next earnings? Another gap down. So going back to Amazon, sorry, I can't type. You know, we weren't able to break back over that price point before earnings. Now, does that mean we can't head higher? No, but to me, the odds are not really as good as they were, let's say, in other instances before earnings. And so, yeah, that's why I think that Amazon, the risk versus reward on the long side, heading into earnings is not favoring the bulls. The next one we're going to take a look at is Facebook. And this is another false breakout here that we have. So as you can see, we have this key resistance here. You can clearly see there's a resistance here, okay? Here it is, knocking into it again. Here it is, here it is, okay? And then we cleared it right here, okay? So very bullish breakout. If you look, last time we had this pattern, and we pointed this out on this video, last time we did a video on Facebook, we had this sideways trading right here, broke over that resistance and rocketed up, all right? That's what should have happened right here. But as you can see, we broke back under this resistance, which turned into support, so now it's resistance again. That's a false breakout, okay? And if you go back to last October, here we are in October again, just like Alibaba happened. I'm going to zoom in so you can see it even better. Alright, so here we have Facebook. This is last October, 2016 October. Look at this setup. Here's that resistance. Here it is again. Here it is again. Here we are breaking over that resistance right here. And then as you can see, it broke back under it right here. And I believe this was the earnings reaction, as you can see. So we had that false breakout right here. So you got that warning before earnings came out. Okay, you got that warning before earnings came out that we got rejected at these price points. So Facebook did not want to stay up here, all right? So now you get that warning. We're getting that same warning today on Facebook, okay? Same warning today we're getting on Facebook. It's a false breakout. False breakout's one of my favorite setups because they're very accurate, even more accurate than an actual breakout, because there's no turning back. You break over resistance and then you break back under it. Well, that's it. That's all you can do. You had your chance. So that's what I'm seeing on Facebook. And the next one we're going to cover is Google. And Google, again, here we are with the false breakout once again. So here's that resistance right there. Here's a resistance right here. Here we are running into it once again, and then we broke over it right here. Here we go, and then breaking back under it right here. We pointed this out here last week. The last video we did on Google, we said that if it breaks this low right here, then it's going to be a short. All right, so we broke that low. As you can see, headed much lower. We're already about $12 lower than where we were starting at this low right there. So congrats if you followed along on that short trade. So now Google has earnings coming up, but now that it has a false breakout over this resistance, back under it, to me, the risk versus reward on the long side is kind of not really there for the bulls. Now, out of all these false breakouts, to me, my favorites are Alibaba and Facebook. As far as these, Google, not necessarily my most favorite because it has kind of had this situation before and it has recovered. But I want to point out another situation right here. Last October as well, you can see had a false breakout. I'm going to show you right here, just like the other ones. Okay? And this is important here because, it's not just one stock, okay? It's not just one stock. This is a lot of stocks here that are in the NASDAQ, all doing the same thing they did last October, all right? So definitely need to take notice. So here's that resistance. Here it is. Clearly see it there. Here it is. We broke over it right here. Looked like it was going to be a nice big breakout, okay? Kind of put it out right here and then ended up breaking back below it right here. And this was the earnings day right here on the 28th or that was the reaction to earnings right there. So it actually did a false breakout before earnings last time. But here on today's action, the current action, we actually did a false breakout before earnings was released. So to me, it's even worse now. I mean, as you can see right here, we saw a break back below this resistance, which was support, dipped, came back up, got rejected against that level right here, and then saw a big dip right here. Obviously, again, we recovered here big time and rocketed up after that, but I'm talking about just the very short term because that's what we like to cover here at the Trading Analyst is the short-term action, the mid-term action, what's going to happen tomorrow, what's going to happen in the next couple of weeks, few weeks. Our outlook is and time frame is about that. It's about 1 day to about 1 month out. So that's what we're covering here in these videos for you. The next one we're going to cover is Tesla. And Tesla, let me get the chart back to the recent action here. So I'm going to delete that Fibonacci retracement level just to clean up the chart. So as you can see here, we dropped big time for you guys. And this is something that if you've been watching these videos, you would know that we've been bearish on Tesla. You can see we had a false breakout. Here's the breakout over this resistance. You can clearly see that resistance here. Clearly see it. We closed over that resistance here and then broke back under it right here. Ever since then, well, not ever since then. We've been liking Tesla for a short, pretty much ever since it broke this trend line right here, and it's working out beautifully right here. And we updated you guys on the false breakout right there, and it headed lower, into our first target here near about 336. You can see it was support here, 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 and over here a couple days as well. So we'll see what happens. Definitely not great action for Tesla heading into earnings. Obviously it can, surprise everyone and head higher and do all that, but to me the technicals are not really looking great for a higher move after earnings. A break below 335 to me would be also very ungood for Tesla. So we'll see what happens, but congrats on this downside move from about 355 all the way down to 335, $20 move already on that short play. The next one we're going to touch on is Twitter. And Twitter, this is another one, and this is another one that did a false breakout, okay? And we called for some downside. We're getting that downside. Again, this is why you need to study this pattern, okay? This pattern, here we go. You have a resistance here, and this is super easy, okay? Super easy, guys. You have a resistance. Here it is again, hitting that resistance. We broke over that resistance right here, and then look at this. We broke back below it right here. That's when we called for some downside on this stock, and here we are getting that downside. And today's move was on a little bit above the recent above average volume. So that is bearish as well. But we're coming into the point that I said it could get a bounce at. To me, I'm not too eager to play Twitter on the long side, but it can definitely get a bounce here against this trend line. So there's that trend line. There's a bounce, several bounces here, and that's matching up perfectly right here to where we're at, as well as the 50-day moving average. The next one is Apple. And Apple, this is another one that we called for some downside on. We called for some downside back when it broke this trend line, saw a big move down. And up here, we called for a rejection at these highs because this was a bear flag. We were seeing this as a bear flag. And as you can see, big gap down and a break out of that bear flag. And to me, I still think Apple has some downside left in it. Okay, we broke out of that bear flag, confirming this bearishness. Okay, so we headed up. We didn't get really confirmation until it broke out of it right here. So to me, that is signaling that we still have more downside left on Apple. So thank you for stopping by and watching the video, everyone. Hopefully you learned a lot and took a lot of good notes, because that's what we want you to do. We want you to learn and get better as a trader. If you want to take your trading up a notch and learn even more and make more profitable trades, then sign up and join with the premium membership. As soon as you sign up and join the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.